Good morning, welcome to this Phoenix Blue update on Friday the 16th of September. I'm Tom Colley and I'll talk you through the markets and the news this morning. Well, we had another quiet day yesterday despite a lot of news. The reason for this is potentially that on Wednesday next week we have the FOMC rate statement, press conference and also the economic projections from the Fed. So it could well be a wait and see attitude on that. I also think that the US presidential election is looming into view now, and that's starting to have an effect on the markets. What is clearly obvious is all the markets are dependent on the US dollar at the moment, so nothing is moving without the dollar moving, and some markets such as equities and safe havens are moving in tandem rather than inversely as we normally expect them to do in a risk-on, risk-off scenario. Okay, but let's start with yesterday's news. First thing yesterday morning, we had a hold on the LIBOR rate from the Swiss National Bank. Nothing unexpected about that. As I think I said the other day, it's over 7 years since they actually made a rate change at the meeting. It doesn't mean they haven't made decisions on rate changes, but they tend to be out of the blue from our perspective, not at these pre-arranged meetings. We had some positive retail numbers out of the UK, and then we had the UK rate decision that, as expected, came in. Last time we had a post-Brexit vote reduction of 0.25% down to a 0.25% official bank rate, but probably the one we were looking at most closely was just to make sure that all the voting members, all 9 of them, in this case, all were of the same view. And that's clearly been the case, so we didn't see a lot of action in terms of the markets off the back of that. However, there was a lot of interpretation that there was potential for the rate to be further reduced to 0% as and when the Brexit issues begin to bite further. Then in the States in the afternoon we had predominantly negative retail sales and PPI figures. We had some positive Philly Fed manufacturing index there. Somewhat they offset each other, but as I said, with the FOMC meeting next week, it was going to take something significant, or more significant clearly than that, to move the markets. It's always worth looking at that. I mean, that looks like a very big figure, a difference between 1.1 forecast and 12.8. If you need to go back historically and see how significant that is, and within the last 12 months that figure has actually bounced between minus 30 and plus 40. So although significant, not as significant as that sort of difference might be on one of the other indicators. Looking forward to today, well, with Chinese bank holiday, but that's effectively overnight, so that's sort of been and gone for us. We've got the Canadian manufacturing sales out at 1:30 alongside CPI and core CPI, and a little bit later consumer sentiment for the US. Now, as I've said on these issues above here, unless we get some really significant difference, I don't see that moving the markets just as these didn't yesterday, pending that sort of waiting for the Fed next week. Now, talking about the Fed, the meeting next week is on the 21st of September. Now, this is a 8 times a year meeting. And in this instance, it includes the FOMC economic projections, which is a 4 times a year event. So it's more significant than half of these meetings. It has a press conference. The following month in October, we don't have any FOMC statement or federal funds rate announcement. Nothing falls in October. Then in November, we have the FOMC statement and the funds rate, but no press conference, and this is quite possibly because by about a week that predates the November the 8th presidential election. Now, this is obviously going to be a big influence. The Fed will make a decision to, I believe, to either cut or otherwise increase or otherwise the rate next week, or we'll be looking through to the December, because this isn't set up for a rate decision or a rate change, because no press conference, and clearly it could be seen as being far too politically driven should it be immediately pre the election. That leaves us December the 14th post the election, which again has the FOMC economic projections. It's the end of the year. This is the month last year where they finally raised the rates by 0.25% to 0.5%. And at that point, we expected them to be doing or to be raising consistently through 2016. That clearly hasn't happened, but potentially what plays out in the US election will be significant in that respect. My understanding, and it is limited, is that both Hillary Clinton and Donald Trump will be looking to spend more on infrastructure, etc., which could be positive for the economy. Trump to a far larger degree, but there are a lot of other uncertainties if Trump was to become president. Okay, let's go and have a look at the charts. We're going to be brief here because there's very little actually happened yesterday, but when we get to the S&P, I'm going to refer back to the presidential election. Okay, here's the US dollar, where yesterday we ranged almost exactly between 95 and 95.50. Is that right? Yes. Too small a screen. Yeah, 95. Well, you can see we've basically been ranging with a hit between here all week. We've similarly got a range-bound scenario as you'd expect on the euro. The only trades were available really yesterday would have been intraday range trades, which to a certain extent would be high risk when you'd got news, and only retrospectively do we realise that news isn't particularly going to drive the markets. So there's the euro, the other major market, the yen. Again, everything consolidating into triangular patterns, meaning indecision. Now we can even see that on the S&P, although the S&P has had some really big movements, and to show this I've had to move it down to the 4 hour, because if you look at the daily, all you can see is 3 or 4 bars almost the same size moving one way then the other. We had the big sell-off, then we had a big recovery, and then another sell-off, and then yesterday we had another recovery. But that does fall into a triangle pattern, which does fit in with what we've been saying, is everybody and everything is in a waiting scenario, wondering what will happen in terms of the FOMC and the election. Now, I said I'd mention something about the election here, and what I've learnt this morning is about the sectors within the S&P. This fall would have been a lot greater had the tech sector, particularly Apple, which has risen 12% this week, and tech shares by weight are a fifth of the whole S&P, so this move down could potentially have been a lot worse without the techs. The area that is on the downside in a big way is the pharmaceutical companies. Now that I've read is election-led. Hillary Clinton, who is on odds the most likely winner. That's not to say there is any uncertainty in that, but she has clearly made constant statements about the overpricing of drugs, and that will have a natural effect on the price of the drug companies within the S&P. Now they make up by weight a quarter of the S&P, so we've got possibly the two biggest sectors at odds in this market, one of which is potentially being driven by or awaiting the election result. So that could be why we've seen such a big sell-off, and there have been some great trading opportunities. We traded it down to here, we traded it back up here, and a couple of our traders even saw a trade here late in the evening and traded it back down to the downside. So there've been some fantastic trades off that move, although they have been purely technical, because we haven't been able to derive macro fundamentals to explain that. And one of the things I'd said is when we've seen gold as a safe haven, we normally expect it to react inversely with the S&P. That hasn't been happening. Overall, it's been moving in the same direction. Yesterday, our gold trade from Thursday last week, where we entered up here, hit its final target at around 13.10. We were looking for what we call a stop and reverse, so stop that trade, reverse the trade in the opposite direction, but we are looking for price action there, not a limit order, so we'll wait to see if that plays out today and gives us an opportunity to get back in the market for next week. Okay guys, that is it for today. If you like how we look at the markets, I know there wasn't much movement for you there. We have our 4-hour free trading session with our fund managers in London next Friday. That's coming up quickly. If you're interested, pop onto this page on the website, which is the events page. Click through, give us your details, and we'll send you an invite, etc. You'll have the opportunity not only to trade live alongside the fund managers, they'll also talk to you about how we trade. You can ask as many questions of them or of other Phoenix Blue team members, and we'd look forward to seeing you there. You'll also see an update on the I've completely thrown me. Anyway, you know what that symbol means. I can't think what the name is at the moment. Yeah, so you can if you're on Instagram, it's come back to me. Sorry, if you are on Instagram, Phoenix Blue Trading, and you'll get regular updates on some of our trades as they progress, but also details about events such as that. We're also in Norway on September the 27th. If you're in that part of the world, again, pop on the website, make an inquiry. If you want to ask a general question, just go to the contacts page and email. Okay, guys, have a great day's trading. Enjoy your weekend, and we'll be back here on Monday morning with an update. Take care. Bye-bye.